Hi, I hope everybody can see us and we'll get started in just a few minutes. We'll let some people join us. And in the meantime, if you would like to please add your name or business name and a little bit about your business, that would be great. And you can add that to the chat. Today we're going to try to keep everything in the chat because I'm alone. Normally we have somebody else that's sort of monitoring the chat and the questions. And I'll try my best to pay attention to them as we go, but it might be a little bit difficult. So, yeah, as I mentioned, if you want to just put your business or business idea in the chat. And yeah, where you're from would also be great. Oh, I'm sorry to hear that your company is closing out soon, but you're going to start your own. So that's great. This is a great place to be. And hopefully you can, somebody let me know if you can't see our simple steps PowerPoint slide, which should be on slide number 2 now, that says list your name and business, what you want to learn. So hopefully that is showing up on you guys' end. So a wellness and float center, and we've got some health related companies, coaching. Now we've got lots of people coming in, so it's hard for me to keep track, but that's fantastic. So glad that you could all join us here today. And as I was mentioning to those of you who are just getting on, if you want to put your business name and information in the chat, then we can sort of have an idea who we're talking to today and where you're from. And unique blank journals for field biologists. That sounds interesting, and definitely it's always amazing to me how many different companies and businesses there are and the many different things that so many of the entrepreneurs in this area are doing. Um, Always entertains me and gets me excited that there's so many different options and things that businesses and some things that you just never think of. They're out there, but you don't think of them, and they're definitely needed. And home health care, that's definitely needed. I was looking at a lot of different places today that probably need that assistance and clients that are in need of some health care. So, as I mentioned a little while ago, I am on my own today. So let's keep everything in the chats because I'm not going to be able to pay attention to the question section at the same time as paying attention to what I need to tell everybody and the chat. So I will try to follow this. Somebody said they need funding. Yeah, we all do. It's always the biggest challenge in almost any business is trying to figure out how to get the money to keep things afloat and keep things going. We'll talk about some options for it, but especially with the startups phase, it's probably the most difficult challenge that most businesses face. We've got somebody that does recycling as well. And I'm sorry that there's a problem with my audio. I don't know what to do about that. Um, I hope, is everybody else having the same problem hearing me? I can bring the mic a little bit closer. Okay. Oh, at least a few of you can hear me. That's good. I appreciate all of the feedback from everybody. So we'll go ahead and get started now. I am gonna start off by placing some information in the chat that you may want to copy and paste and that I'll be mentioning a few things as we go, but it's some good information. And some links to some of the things that we'll be talking about today. My voice is repeating. There might be feedback on your end. I hope it's not feedback on everybody's end. Yeah, the defaulting on funding is probably a large issue as well, because we don't want to take out loans that we can't pay back. Part of what we'll talk about today are the financial reports that will help you to sort of estimate and figure out whether you can afford the funding that might be given to you, because that is definitely a very important issue. And we want to make sure that we can pay it back and that the business can make enough to pay us, to pay all of the creditors, and to pay any lenders or any other shareholders. So, all righty, well, let's go ahead and get started. As I mentioned, I copied some links into the chat that we'll be referring back to at various times today. Just to give you a little bit about SCORE, hopefully a lot of you already know about SCORE, and we are all volunteers here in the Charlotte area. There's about 80 of us. We do provide free confidential mentoring, one-on-one sessions, video, email, in person. Most of them these days are video just because it makes it more convenient for scheduling with the clients and with all of you. We also offer educational programs and webinars such as this one. I also provided in the link some information about an event that we're going to be having on April 9th. It's a big mixer event. It's here in the Charlotte area. I believe it's at Calvary Church. And that's just a great opportunity for you to meet other people who are entrepreneurs or people thinking about starting a business, and to meet with some of our volunteers for various programs. And that one will be in the evening on April 9th. Then we also have some other simple steps classes similar to this one. One is going to be focused on branding and marketing. Another one is more general. And I had those dates written down, but I don't know where they went. Oh, here. So April, of course, it's hiding from me on my screen. Sorry about that. So those are two in April. They should be in the chat box. And then we also do some community outreach events. We are having our Pitch for Growth event coming up soon. I am not 100% sure whether the deadline for that has passed or not, but if it hasn't, get your applications in very quickly. Little bit about me. I am a SCORE volunteer. I also own my own business. I own my own law firm. I do a lot of estate planning, estate administration, and business law, help people buying or selling businesses or set up businesses. So that's my general background. I don't see the dates on it. Okay, so the date for one of them is April 2nd and the other one is April 14th for the simple steps classes. And the big mixer is April 15th. And hopefully the link should work, then they'll have more information and some other dates that are in there. I'll repost those. Oh, well, part of the problem is apparently I didn't send it to everyone. I only sent it to myself, which is not very helpful. So now you should have all that information. So SCORE is all across North Carolina. Well, it's all across the nation, but we do have the 7 chapters here in North Carolina. And I am from the Charlotte chapter, but we welcome anyone to these webinars, especially now that we do them on the internet instead of in person. There are also on the website and the links that I've sent you, there are some events that I believe our Durham Chapel Hill office is putting on for any of those that you might be in that area. And you can check out the score.org website, enter your zip code to find the chapter that's closest to you and their events. You're also welcome. Many of the other chapters have events that, as long as they're via the internet or you're in their area, you are also welcome to sign up and join those. So our one-on-one mentoring, I would encourage all of you to sign up for one-on-one mentoring. It gives you the best value. They try to match you with mentors that relate to whatever specific business issue that you're having, or whether you're a startup or in business and having specific challenges. You can go to the score.org website. They're going to put in your website and then select the button for request a mentor. And then once you answer a few questions, they should match you with a mentor who should be able to email you within a few days to set up your first mentoring sessions. We try to have ongoing, meaningful relationships with our clients so that we talk to them on a regular basis and try and stick with them through the life of their business. So if you just have a one-off question, you can certainly sign up for a mentor for that. But if you want the ongoing mentor, that will give you the best value. So the two classes that I was talking to are the session one, Startup Basics, and the Branding Concept and Marketing. Those are sort of complementary to the session that you're attending today, which is the Financial Matters and Funding. Once you sort of go through that, and while you're meeting with your mentor, if you're a new business, then you sort of decide whether it's a good business to start or not. If you have questions after you're going through the information today and you're trying to build out your financials reports and your whether you want that no-go or go, you probably do want to sign up to talk with a mentor who might be able to help you out with some of those decisions, and at least making sure that you make an informed decision, because that is the general goal of using the financial reports and business plans. And then you want to build out a plan. So why do you need a financial plan? Well, because you want to make money. That's why you're going into business. Otherwise, you probably shouldn't go into business if you don't want to make some money. And you also don't want to go broke by needing to put more money into your business as you're going. The financial plans can include income statements, balance sheet, cash flows, and break even, all of which we will be talking about today. The components of those are the main components of the financial plan. How do you maintain financials? We'll also be talking about. Then we'll get into more of the funding. What are sources of capital and funding? What are the 6 C's of credit and capital? And what information would you need for a bank loan? That's sort of the overview of what we're going to be talking about today. So the financials, some of the questions that you will be asking if you're in business or starting up is, how much money do I actually need to get this business started? Am I going to be able to finance it myself, or do I need outside financing? How much revenue is the company going to generate? How much does pricing change my profits? And how long before I make a profit? That's probably one of the most important things to figure out, is at what point are you going to be able to make a profit, and then what point are you going to be able to actually live off of the profit that the business makes? In determining that, you're going to need to know what your fixed costs are, when you'll need more staff, what costs are in line with the volume of business that you're doing. You can do a lot of comparative with some of the information that's in libraries or in other locations? And how will my costs increase as the business grows? Also, when we were talking about that Simple Steps for Business class that we offer, part of most of those classes also includes a presentation from the Mecklenburg County Library System, where they sort of go through a lot of the resources that they have, especially related to researching competitors and other people in your industry, and just helping sort of do that competitive analysis, and with many of the resources that are available for free through the library. It's a great presentation. I learn everything. I learn more every time I listen to it. So in the short term, financial plan is going to help you to test the feasibility of your business. Is it reasonable to go into business? It's going to define the model and what your business plan is with the revenue, the sales, and the costs and the staff. It's going to identify elements for development and startup costs, the funds needed to finance your business, and the impact on the fixed costs burden. You're going to make sure that your financial plan and business plan also meets your personal income goals. I know that there's a lot of our SCORE clients out there that are sort of starting their business as a side gig, and they want to grow it to a certain point so that they can quit their current job and focus on the business. So it's important that the business makes some money to enable you to spend more time on the business. In the long term, the financial plan helps you to understand financial risks and rewards, to have a plan to guide your business decisions and to monitor your results. One example is if you're focusing on a certain product and it costs more to make that product than what you're selling it for, you want to monitor that situation so that you can adjust for it. Either get your costs for that product down, increase what you charge for it, or switch and focus on the more profitable products that you're serving or your more profitable services. So you want modeling tools that will enable you to figure out, should I do this? Should I do that? What things should I change in how you're running your company? In a lot of ways, the financial reports and the information that you can get out of them should be dictating what you're going to focus on and how you're going to run and operate the business. And you want just benchmarks for tracking your progress. Are you meeting your goals? Do you need to change things in order to meet those goals? And you can learn a significant amount from your business and the planning mistakes and why did you do this and why did you do that? And maybe you want to change some things as you go. So understanding your financial statements. There are many different types of financial statements. We're going to go through the main financial statements that are typically used at almost every business. The income statement measures your revenue and your expenses. Your balance sheet shows you your company's total value, accounts receivable, inventory, and accounts payable management. The cash flow, as they say, cash is king. If you don't have it, it becomes a problem. So you always want to know where you're going to stand from a cash standpoint so that you don't have a cash flow problem that then creates more problems with how your company is running. And then you want a break-even analysis so that you know when you're really going to be making money and in the positive cash flow. So the income statements, which is also called a P&L or a profit and loss statement. This is one example of how it looks. There's many different iterations of these types of statements, but the main thing is that it is measuring the income and the revenue that's coming in and the expenses that are going out for a specific period of time. You can run an income and expense statement or profit and loss for a 1 month period, a 1 year period, or for the life of the business. Every one of those different measuring periods are going to give you a different outlook on what's happening within the business. As we said, there's not a specific format to a profit and loss statement, but you want it to reflect your business needs. Each of these categories may be slightly different depending on what you do. Cost of goods sold could be broken down into different types of products, depending on, there again, what type of business you actually have. The expenses can be broken down into different groups. I can give you an example on the revenue side. I actually break my revenue down into, is it a business client? Is it an estate administration client? Or is it an estate planning client? Just so that I can track those. The more detailed your information, the more you can analyze it and figure out what's happening within your business. And then expenses, you want those broken out into different groups so that you can track what you're spending on different things. A lot of people, like within marketing, might break down, this is what I'm doing on social media, this is what I'm doing on networking or referral marketing, just depending on what you want to track. Then the balance sheet. This measures essentially a crude result of what is the business assets worth and the assets and the liabilities. So sort of what is the net worth or the net equity retained in the company. You take the assets, which is essentially money in the bank, the other assets like furniture, fixtures, equipment, land, if it owns any land, minus the liabilities, how much does the company owe? And then you end up with the net retained equity. The balance sheet is typically effective on a specific date. And what the company is worth on one date may be different from another because you're going to have a different amount in the bank account. Cash flow projections. So this is so that you can make sure you don't run out of cash. One thing we'll be talking about once we get to the funding is you need to get that funding in place long before you ever actually need the money. Because if you get to the month down here where your net cash flow is negative, means you have no money in the bank and you've got to wait till somebody else pays you before you can pay your bills. That becomes a problem, and most lenders are not going to want to lend to you at that point. You want to plan for those things so that you can get through those low periods of time without having it compromise your business. This measures the movement of the money in and out. It sort of includes some non-profit and loss items, including new cash investment. It usually includes your loan or advancements and your payments on your loans, asset purchases, and the loan repayments, which you just mentioned. Break-even analysis. This is a report that shows your sales revenue and covers your expenses, and it should be showing you when your profit reaches zero. So that will include your startup costs and the cost for your products, your lease, your loans, and at what point are you actually making money that will go into your pocket, essentially. Some people might include some of their salary before the actual company is breaking even. Just depends on how you want to set it up and what is important for you in your life to be able to look at within the report. Startup funds. The other components of your financial plan, you have to know how much you're going to need to start. Some businesses may need very small amounts. You might just need enough to pay for the website and the initial services that you're going to be providing. Others are going to need thousands or even millions of dollars to start up. So it really depends on your business and what its requirements are going to be, and determining what your sales volume is. How many clients are you going to need, or how many customers, so that you can make enough to cover your expenses and the revenue that you're going to be making. What salaries and wages are you going to need to pay before you even get started or as you're going for ongoing expenses? And your fixed operating expenses, what are your variable operating expenses and funding? And we'll talk more about those as we go. So the startup funds, how much are you going to need? You want to create your business, your initial deposits, your equipment, paying your attorney and your CPA in the first little bit, paying for insurance and all the other expenses that you're going to need on day one. If you're going to be renting a space, your deposit, first, last month's rent that they may require, any upfitting, any equipment that you need to buy, all of that might be included in your startup fixed costs. You want to cover your early losses so that you can grow. Again, you want to take some caution. You don't want to start spending like crazy because then you may end up with some cash flow problems and some trouble in your business. Projected sales forecasts. Revenue and just predicting the revenue that your business will generate. Again, in order to figure some of this out, you may be going to the library to look at some of those resources. You may be checking with other people who are in a similar business and trying to project what you actually think is the amount that you're going to sell and at what price points and what is the volume of your business so that you can determine whether it will be profitable. The level of resources that you're going to need, your staff, your equipment, your materials. And based on your business, it may require some offline work to calculate. There's a lot of different ways to sort of gather this information. One idea is in certain situations, you may want to go ask the competitors in this area, but maybe you can ask a competitor that's in another state that's not a direct competitor to you. Lots of business owners are more than willing to share ideas and thoughts. Now, SCORE does have some financial templates and they will also give you ideas for some of the expenses that may be included in these types of reports. One of the links that I gave you is the accounting tools that includes some of these types of reports that you can then it can help you to generate and determine the profitability and sales forecasts. And again, it's something else that most mentors are more than willing to help work with you on. Your revenue is an outcome. It's all linked into your sales forecast, and it depends on your product mix, your expected volume, services you might provide if it's not a product, your pricing strategy. Are you going to try and beat everybody and be the lowest one in the community? Or are you going to price on a high end and therefore your product volume could be lower? What is the market competition and what is the economy doing that day? Because it does seem to change on a regular basis as to what the economy looks like and what people are buying and what people are trying to hesitant to purchase. Salaries and wages, that also varies and goes up and down as to how much you're going to need to pay your staff. And you need to know how much staff you're going to need. And you're going to need to sync that with your revenue and volume because you don't want to have too much staff and not enough work for them to do. And you also don't want to have too much work and not enough staff. It's always sort of I look at it as a stair step. It's like you grow a little bit, then you need another employee. Well, now they don't have enough to do. So then you grow a little bit more until there's too much to do and you keep trying to outpace it. But you want to keep those things sort of closely tied together. Always include yourself in the forecast because the true picture is also includes what you're making and what you need to make and sort of realistic market wages. You want to include the benefits and tax for each staff member. At one point, and I'm not sure it holds completely true, But if you consider the salary that you're paying someone, you may want to add an additional third to that price, depending on what benefits and the employment tax that you're going to need to pay is the true cost of what that employee is going to cost the business. And a lot of that depends on whether you're going to be able to offer, IRAs and 401k matches, and whether you're going to have health insurance benefits or not. But even the additional tax expense will make a difference in what you can afford. And the employees never see that, so they don't always appreciate it. But it's definitely a cost for the business. Your fixed operating expenses, the core costs of being in business, your fixed costs, rent, utilities, insurance, and you want to be cautious in creating the fixed costs and at the startup because you have to overcome those before you can make anywhere close to being able to break even. So your costs that change with production or volume activity are your variable costs. So commissions for a salesperson, materials for packing, because the more items you sell, the more packing materials you're going to be. Marketing is often variable because the more marketing you do, hopefully the more sales it generates. All of what is variable within your business is going to depend on the type of business, and not all variable costs have a one-on-one. If I pay $1, I'm going to get $1 in extra benefit. So you want to make sure that the variable costs are tied to your revenue and that it's not wasted money. Maintaining your finances. So, do you need an accountant? You may. It depends on your financial acumen, your situation, and whether or not you need a tax person or not. If you're going to have employees, I would encourage you to have a payroll company or an accountant or tax preparer that is able to do the payroll reports. I can barely even figure out what my payroll reports are saying, much less if I had to actually figure out how much withholdings for the state of North Carolina and the federal government needed to be done. Larger businesses definitely need an accountant or an in-house person to keep track of their accounting. Can you keep your own books? Absolutely. I actually use QuickBooks in my company. It's a great tool. You probably want it tailored to your business a little bit more than the generic straight off the shelf version, depending on what you're doing. Different industries also have different accounting software tools that can be great for those industries. Now, there's a lot of specific ones if you're in like construction world and those kind of things. Each tool has its own learning curve. Most accountants and CPAs do work well with QuickBooks, and it is sort of made to be generic so that it will cover what most businesses need. You can also print out, if you've accurately input the information from what's happening with your business, then you'll be able to print out most of the reports that we just talked about, along with many, many others that will give you a good picture of what's happening with your business. Please make your books a priority and put the data and the information into the system, whatever, even if you're using Excel. It is incredibly important. At one point, I had some clients who had basically a lawn maintenance situation and business, and they did not track their expenses. They just, spent money when there was money in the bank account, and they put money in the bank account when they made money. When it came time to do their taxes, I don't think their accountants were very happy with them. So the more that you can keep things in an organized way, even if it's a shoebox with your receipts. By the way, if you have expenses, you do need to keep your receipts and all of that information, even if you're going to Staples and buying something, you need to keep the receipt because Uncle Sam has a right to come and look at it if you're going to deduct it from your business expenses. Financial statement analysis. So every month you should be reviewing your financial reports within hopefully 10 days of the end of the month or whenever you're closing out your finances for the month. You want to look at your ratios, your accounts receivables, your accounts payables, and sort of do a benchmark. Was this a good month? Was it not? What do I need to adjust to make sure that next month is better? You can even use a manual system of record keeping. If you want to keep it on a piece of paper and write everything down, that's fine for some small businesses. You'll have to do a little more work to do some of the analysis and the reports. So that is where the computer system comes in. However, the computer systems do have a little bit more of a cost. Excel's probably one of the lowest versions of costs, but it just depends on what your business needs are and how many entries and transactions you're going to need to enter. Every single bit of income that comes in needs to get entered somehow. Every single expense that's happening needs to get entered with their appropriate categories. But you are going to want to learn how to read and how to do your accounting to a certain degree. Yes, you can hire a bookkeeper, but you still need to review the documents and the financial statements so that you understand what's happening with your business. Funding and cash flow. The funding needs are important. What's the available owner's capital? How much money are you gonna have to be able to put into the company? What availability do you have for credit? Do you have a good credit score? Or do you have loans already available? If you're going to use credit cards, what's the interest rate and how soon are you going to be able to pay it back? Because usually you can get in trouble with some of those kind of lending situations. But you want to know, some businesses are very capital intensive, others don't have very much of a need for the initial capital. Sources of business and capital. So owner's equity, that's the money that you would be putting in yourself. You might be reaching into your savings or investments or insurance or cash value. You might be getting money from friends or family, and that might be in the form of a loan, or it might be in the form of ownership or maybe gifts. Home equity loan on your own house. Well, remember, you're risking your house at that point. You could get bank or credit union financing. Those usually have better terms than some of the other potential loans, such as credit cards. You could bring in partners. Bringing in partners is always a little scary to me because they have expectations and they may or may not work as hard as you are going to work. And then sometimes it becomes sort of difficult to get them out of your business. So you need to, if you're going to bring in partners, you need to set the rules in advance. You need to probably see an attorney regarding getting an operating agreement or a shareholder agreement to talk about how you're going to get those people out of your business or how you're going to get out of the business if you might want to retire. You know that the business is going to end at some point, or at least your ownership is. It's either going to be a disagreement, death, disability, divorce, bankruptcy. None of them are good options unless you're getting bought out by somebody who wants to pay you lots of money. But you know it's going to end. If you're going into business with somebody, address that at the beginning when you're all getting along rather than fighting over it towards the end. You could sell some of the capital stock or government grants. There aren't a lot of government grants for for-profit companies, but if you're in an economically disadvantaged or a VA situation, then there might be some grants or in specific industries. If anybody wants to put questions in the chat box, please let me know. I'm happy to answer those as we go or as we get towards the end. Sources of capital. You got special and non-traditional sources. SBA guaranteed banks. The SBA doesn't usually hand out money itself. What it does is it guarantees that the bank is going to get paid, but you would apply through the bank in order to obtain a loan that is guaranteed by the SBA. And the goal of the SBA is to assist in giving small businesses a chance. Actually, we are an affiliate of the SBA. As SCORE, they have helped us with funding in the past so that we can provide these sources. The Department of Community and Economic Development, the Department of Agriculture and Rural Development are also some good options for potential funding and grants. Angel and venture capitalists, somebody's actually asking about those. It really just varies and depends on your industry. They're kind of hard to find. You want to make sure that they're also not going to take advantage of you or put you in a situation where you're not going to be able to make money, because their focus is on making money for themselves, not making money for you necessarily. Crowdfunding, there are websites that do that. So, whoops, got ahead of myself, sorry. You may want to write these down. These are the websites for government loans and government grants. So the SBA.gov, they actually have a lender match program. So you can go on and they will take your information and then send it to some of their banks to see if it's a match, to see if those lenders might let you apply for loans that might be government backed or SBA loans. And then the federal government grants, there again, if you're in the VA situation or an economically disadvantaged area, there are more grants, but you can go to this website and search to see if your business might apply. Yes, I do believe that the presentation will be emailed out to you. I'm not sure that it's going to be the recording. I think it's more the presentation itself, but I'm not in charge of that. So I'm sorry, I can't fully answer that. But hopefully you will be getting that shortly after, within a few days. Lenders and banks, what do they look for on your application? So they are going to be looking for your credit first and foremost. As the business owner, they care as much about your personal credit as they do the business itself. And especially if the business hasn't created a credit report or a credit history, they are going to be strictly looking for your personal credit and what your credit scores and history are. They also want to know, do you have management expertise and commitment, the feasibility of the business plan? So they're going to want detailed information about your business plan. Are you putting enough equity into the business to get the business started? And will they have significant or sufficient collateral if there is a default? The 6 C's of credit. This is your character, capacity, collateral, capital, conditions, and cash flow. And we're going to walk through each one of those. So your character is your trustworthiness, your personal and your business credit history, your integrity, the quality of your resource references, and your experience in the business. I have seen situations where somebody's coming out of corporate world and they want to open a restaurant. The banks are going to be like, you don't, if you've worked for a bank, what do you know about running a restaurant? So in those situations, it's kind of advisable, especially before you jump into running something that you may not want to run, is to go work for one for a little while and see, get some experience to make sure, first of all, that it's what you actually want to do, and to build that experience within that particular business so that you would be able to make an impression on the lender that you know what you're going to do and you're going to be able to make a success of it. So capacity. Is the business going to be able to repay the loan? That's the primary thing that the bank wants to know is, if you've borrowed it, are you going to be able to make the payments? How soon will you be able to generate a positive cash flow? When will you start showing a profit? How large will that profit be? And can the profit be sustained and continued? Then they're going to want to know the capital. How much money have you personally invested? I know that there's a lot of information on the internet that implies that you can go and use somebody else's money to build a business. Well, I don't know of a lot of people that are going to want to give you their money if you don't believe enough in your business to put your own money into it. It's just not something that happens very often. And what is your ability to save money and accumulate and grow the equity in the business? Collateral. They're going to be looking to be fully secured to the extent possible. Some collateral can include a second source of repayment. Some are third-party guarantees. Anytime that you're guaranteeing the loan for your business, that means that not only are the business assets subject to liability, but also your personal assets are. If anybody asks you for a personal guarantee, that often comes when you're getting a loan or if you're signing a lease. Usually the landlords want that personal guarantee. In that case, you've got to make sure that it's something that is worth you risk taking that risk. Tangible assets, that's going to be your furniture, fixtures, equipment, your property, that would be the real estate. And then accounts receivables, in some situation, lenders can take an interest in the accounts receivable, which is essentially the money that your clients or customers are paying to you. Some cases that can just be a security interest that is filed with the Secretary of State called a UCC statement. Or it could be that there are some they're the equivalent of a payday lender, but for a business. I think some of them are considered factoring loans, and they essentially take control of your bank account. And then every time money comes in, they swipe it and take a portion out for the repayment. Those are historically typically really high interest rate loans. To the extent that you can, you want to avoid them. And then they may take a security interest in your inventory. That would be the goods and services or the goods that you have that you're trying to sell. Loan conditions, the terms of the loan. How are you going to use the loan proceeds? How much are you requesting? What is the length of the loan? So the length of a loan to purchase real estate is going to be much different than a loan to purchase a piece of equipment, because the real estate and the building on the real estate is probably going to last much longer than the equipment. So they want to make sure that they can get paid back within the period of time that purpose is commensurate with. The local economy and the climate of your industry also make a big difference. Sometimes lenders are in a situation where they want to lend to one industry versus another. A lot of the banks try to have sort of a diversified portfolio where they're not all in one particular industry. Like they may not want to all be giving loans to car dealerships. They probably want some of those loans along with the restaurant loan, along with other industries. Um, where is the money coming from to repay the debt and the obligation? Ideally, it's coming from the income that the business makes, but they're also going to make sure that there is enough business, and that's where the cash flow reports come in. The lender is going to want to look at those to see that there is sufficient loan and money coming in to pay their debt back. And that you still have enough money after you've paid them back to continue the operations of the business. And what kind of a cushion are you going to be keeping just in case there's a bad month? It's very important to keep a little bit in reserves, just like you should be doing that for your personal life. Credit reports. Typically, they do one at least a 700 or greater on your personal credit report. If you're not sure what your credit score is, you can once a year go to annualcreditreport.com, or I think you can also go to creditkarma.com, and you can print out your reports and get your score. They have a lot of different ways where while you're on those websites, they are trying to encourage you to sign up for credit monitoring and all of the other things. So just be careful as to what you're clicking on and paying attention as you're going through that if you truly want the free credit report and you don't want to sign up for any of those extra services. Bank loan applications. So they are going to want a cover letter that introduces you, your history, a lot of the factors that we were just talking about, especially your competence and trustworthiness and all of that. They're going to want a summary of the financial needs. Why are you borrowing this money? What do you plan to do with it? They are going to want back financial statements for at least the past 3 years and your tax returns. They're going to want a projected cash flow statement showing that essentially you're going to have enough cash to pay them and pay all the other bills for at least a 12-month period. They're going to want to know what kind of collateral. If it's an SBA loan, they typically take collateral on everything that you have. So that often includes the accounts receivables, your mortgage, a second mortgage on your house, your accounts receivables, and all the other collateral that we talked about. Yes, I do believe that the webinar, or at least the slides from the webinar, will be sent out probably in a few days after this. They're going to want your personal tax returns along with the business tax returns. They're going to want your personal finance statements. They're probably going to want a guarantee from you, and they're going to want your resume. Also remember that anytime that they're pulling your credit score will probably drop a little bit. So you may want to shop around and make sure that you're ready to do the application and before they actually start pulling your credit reports. Bank loan applications, other questions that they might be asking. Have you had any legal claims, liens, or judgments? Are any of the assets already subject to liens or collateral for loans? I've seen situations where clients are, or somebody is trying to sell a business and they don't realize that the American Express card or some other card that they signed up for actually took a security interest in some of the assets of the business. You can do a search on the Secretary of State's page in North Carolina for UCCs, and you can also check with each county's Register of Deeds for mortgages. In North Carolina, we call them deeds of trust, though, to check and see if any of those sort of situations have occurred that you might not be aware of. You would have had to pay to sign some documents before anybody can get the security interest in the assets, but some people forget what they've signed as well. Tax returns, are your payments up to date? Do you have any life insurance? That's another form of collateral that the banks often want, because especially if the business is you, if something happens to you, then the business is going to go away. How is the lender going to get repaid? In some situations, that's where the life insurance might kick in. And what is your household income? Is it solely dependent on this business, or do you have other income? And what are your expenses? They want to make sure that you're going to be able to eat and to continue your living when they give you a loan. So the review is, hopefully we have covered why the financial plans are needed, the key parts of a financial plan, accounting and bookkeeping systems, the 6 C's of credit, banking relations and application, and sources of capital. So this is an assessment that we often use in SCORE to help clients decide whether they are ready to start a new business. Is the idea feasible, marketable? Are you able to implement it? Are you going to have enough funding? And are you personally ready to take on the business? So we're close to wrapping up, but I will be happy to stay on if people have questions. So just let me know as we go if that is a situation and you do have questions. The other classes that we offer are the simple steps, the startup basics, and the business concepts. I think this QR code, if you want to click on it, might actually take you to that page to help you sign up, or you can use the link that I put in earlier. And let's see, maybe I'll try to copy that again and send it so that it'll be up front for everybody. And then okay. So this is also a QR code where you can obtain a mentor. You can also go to the score.org website and enter your zip code and then put in your contact information, and you will be matched with a SCORE volunteer so that we can get in touch with you to schedule the mentoring. So I'm sure many of you have heard about the federal government and some of its cutbacks. At SCORE, we were mostly our SCORE National, which helps us to fund the costs of webinars and the costs of our systems, and our national headquarters has been drastically cut down. So we want to continue to provide these services, these webinars, and our mentoring for free to the extent that we can. We do ask for donations now, and I will post the link for the donations here. Hopefully you've gotten some value from this presentation and from our mentors. And this link is a donation to our specific chapter so that we can help to continue these webinars at a free expense. Many of the other chapters are having to go to a charging for the webinars. We really don't want to do that, which is why we are asking for your support, and we do appreciate your support. So there is a video that I'm going to play now.
Before we wrap up, I want to take just 1 minute to say thank you for joining us today. We know your time is valuable, and we're honored you chose SCORE to help you grow your business. Now, SCORE has always offered these webinars free of charge. But here's the reality. Due to changes in federal funding, some of our support has been delayed or even cut. And while we're committed to keeping these programs free, we need your help to do it. Think of it like this. 6 Today's webinar gave you real value. Maybe leave us a little tip the way you would for a waitress who gave great service. Or maybe you want to give forward so the next entrepreneur can benefit just like you did. We're only asking if it's within your means. If it's not, please just keep learning and growing with us. But if you can give $5, $10, $25, whatever feels right will be directly helping us keep these webinars free for everyone. There's a secure link in the chat. Takes less than a minute to make a difference. Thank you again for being here, for your energy, and for supporting SCORE's mission to help entrepreneurs thrive. Before we wrap up,
There. This is the same link that I did put into the chat. If anybody has any questions, I am more than willing to stay on for a little while and try and respond to some of the questions if I can. So please just let me know if you have any, and you can put those into the chat. Hopefully everybody has a good evening and the weather is getting nicer. Too bad I don't think it's going to stay nice forever, but at least it's a little bit better than it has been. Thank you so much. I appreciate all of you. Go back to the QR code. I can try. Share the screen again. So this is the QR code for the Startup Basics class. And then I'll give you a minute for this one and then switch over to the other QR code. Thank you, guys. Then this is the QR code for getting a mentor. And again, you can also go to the score.org and put in your zip code. And if you put in your zip code, you can also get to the Charlotte, if you're in our area, events, or if you're in another area, you can get to those events. And the zip code is how they base where your mentor is going to be from for the most part. And there are chapters all across the United States. But it seemed like most people were in this area, but we'll find that out soon too. So most of our mentorship is for-profit businesses. We do have some webinars, however, that are geared towards charities or nonprofit companies. I think we do those about once every 2 months and have an expert speaker from another area that provides some information that nonprofits would be able to do. All righty, well, I am not seeing a lot of questions come in, so I'll give it another minute or two and then we will end the webinar, but do appreciate everybody and hope y'all have a good evening.